All right, welcome to the video. Anthony here with Hawkeye Traders. We are going to dive into how to identify support and resistance for supply and demand, utilizing and understanding price action and volume. Guys, it's very, very key to be able to have the ability to see what the market is offering you, especially in a ranging market, okay? Very, very important to be able to do very simplistic analysis based on your understanding of volume and price action. Putting those puzzle pieces together give you something called market context, right? Tells you where in theory, right, if our assessment is correct, if our analysis and interpretation is correct, what is likely to happen when, where, and why. Now, this is not hindsight, okay? I want you to understand that I identified this live in front of folks this morning. Okay, this was definitely not like, oh, Anthony's cherry picking this thought process. No. Folks that are trading live money, I provided this analysis and interpretation to this morning. Okay, so we started off 8 a.m. I want you to very specifically look at this candle. I'm going to drop an arrow on top of it right here. Okay, I want you to specifically look at that candle, and I also want you to very specifically look at this high printed red volume. And I'm going to kind of zoom this in so you can see really just that price action a little bit better. This is what we came into the market with. We had ultra high buying volume, followed by high selling volume and zero follow through. So, openly, I made the assessment, hey, if we can hold the wick of this candle as newly appointed supply or resistance, whichever term you prefer, there's a better than not chance that we're going to probably sell off from here. Well, we danced within this wick until about 8:30. We came back to retest it, placing a lower high at 8:48 and 8:51 before we perfectly sold off into newly appointed support or demand. How did we identify this support or demand? Well, let me show you. Okay? Right here, very specifically, I want you to look at this candle, and very specifically, I want you to take a look at this volume bar. Okay? Right there. We have ultra high selling volume, and notice we close roughly at the 50% area of the entire span of this candle. Now, I openly said, based on my experience of interpreting volume and price action, that if we hold this wick, it should now provide support or demand. Notice we get heavy buying. We come back in for a retest again with notably heavy selling, unable to break that low. Very strong sign of a reversal about to transpire. And as you notice, we put in a higher low here. We go on to test our supply or resistance area, pull back into this very simply drawn trend line, right? I drew two trend lines, descending highs, ascending lows. Notice right here where they intersected perfectly, price action found support, and then we had gone on to again attempt to push through ultra high selling volume right there, and this bar right here, pulled back one more time, placed a higher low, and then went on to just consume whatever liquidity was resting above before we started selling off once again. All we essentially did was consume whatever stop orders were previously resting above this area when other folks recognized exactly what I did and got short. Those folks who still had positions on had their stop orders resting right above this area. All the market did was come back up, consume those stop orders, and now we're rolling back over. The support and resistance, or supply and demand, was very simply identified by utilizing the wicks of candles that had high volume. That's it. That's it. Being able to create a thesis around volume and price action can give you the picture of market context so that you can understand where you no longer want to be short or no longer want to be long, and be able to accurately take turnaround trades, pinpointing highs and lows that have huge probability of price going in your favor. If you got short here, okay, the close of this candle, you were risking roughly 17 ticks. When I identified that price was no longer going lower, you had the opportunity to capture 88 ticks. Okay? That's like a 4+ to 1 risk reward ratio. From this area, when we identified that we were not going lower any further, you had a risk of approximately 25, 26 ticks, and you knew exactly where to take your profit as you reapproached here. Again, 88 ticks. Low risk, high probability can be achieved by understanding the relationship between volume and price action. Folks, that's how it's done. Okay? If you want to learn more, there's some links below this video. I encourage you to click on them, consume the content, reach out to myself personally, reach out to my concierge team at Hawkeye Traders. You must understand volume and price action because you cannot trade without it. I don't care what fancy indicator you have dancing across your screen. Without an understanding of this first, you are going to struggle to find consistency. And without consistency, you will never achieve profitability. It's that easy, guys. Okay? Being able to sit back, simply look at volume and price action, and I'll take all the drawings off the chart here, right? That's what my chart looks like when I come to it every single morning. Nothing on it. Hawkeye volume, price action. With that, I am able to now interpret what is happening, when, where, and why, so that I can mark my chart and go, okay, if buyers cannot overcome this wick, we're going to sell off. If sellers cannot overcome this wick, we're going to rally. 170, 180 ticks of profit opportunity both to the downside and back to the upside. About a 20 tick risk here, about a 25 or 26 tick risk here. Huge, huge risk reward. This is how you make money. And if you want to learn more, you have to take the next step. Right? You must understand volume and price action, because without it, the market will just fool you every single time. Because the only two things that ultimately matter are volume and price action. And every indicator that you put on your chart, as you can see, I have none, other than the Hawkeye volume and the Hawkeye price action, is going to print based on what volume and price action are doing. So if you need a foresight of what's going to happen next, you don't want to wait for a lagging indicator to print. You want to have the ability to hone in on what's happening so that you can make educated decisions that constitute low risk and high probability. Again, guys, if you enjoyed this video, I ask you to simply like it. If you would like to leave a comment below, I will personally answer it. If I can do anything for you to help you along your trading career, please feel free to reach out. And again, there's some content down below. Click those links. Let us know if you have any questions. Guys, it's time to take your trading to the next level. God bless, and I will see you in the next video.